Well, our next guest warns this move will be much worse than the markets expect. For more, let's bring in Tobin Marcus, head of U.S. policy and politics at Wolfe Research. Tobin, the president says he'll be more lenient. You don't think so?
So I think the way to understand President Trump's comments there are the administration's framework for thinking about tariff reciprocity goes way beyond just tariffs. It looks at a lot of non-tariff factors. Most importantly, it looks at the value-added taxes that other countries impose. These are domestic consumption taxes, but because they're rebated at the border, they look like unfair export subsidies to the administration. I don't think that's a great way of looking at it, but I do think that is how they are looking at it. And so if you include value-added taxes in these calculations, you get very, very high numbers. If President Trump is now thinking about setting numbers a little bit lower than those calculations would spit out, I think that's where we're getting this notion of leniency, of giving breaks to various countries, as he said earlier in the week. So those numbers, they could come in lower than the absolute high end of how these numbers could get, depending on those VAT calculations, but still end up, I think, at surprisingly high levels.
So in other words, more lenient than the VAT level might suggest we could do in response, but still higher than what the street's anticipating. Let's walk through today's headlines just one by one here. So starting with the auto tariffs, maybe it's today, maybe it's tomorrow. What's your baseline expectation here? And why haven't we seen the auto stocks moving much as we've been getting these, kind of disparate announcements in recent days?
I think people, frankly, are so overwhelmed by noise that it's hard to trade all this stuff in advance. There's just so much uncertainty about what's going to happen and when that I think we're going to get more reactiveness to the actual announcements than we are having this stuff priced in advance, which is part of our concern about, quote unquote, Liberation Day next week as well. So, for the auto tariffs, this is something that it sounds like they're going to reach back to this 2019 study of the national security concerns around auto imports under Section 232 that they completed during the first Trump administration and use that as the legal predicate for the tariffs. The expectation is they'll be global. Clearly, this administration's overall orientation has been towards imposing tariffs across the board. In this case, I'm hopeful that we will get some accommodation of Canada and Mexico. Again, that 2019 study does call for Canada and Mexico carve-outs under some so-called side letters in the USMCA. And I think that would obviously be a sort of a natural prudential move to look after the U.S. auto supply chain as well.
Yeah, so in other words, it's hard for, analysts, investors, the street to really price anything in, even these kind of trial balloons that have been floated, because it's just so unclear what the substance will actually be. And that makes the event risk around the actual announcement larger, you think?
Right, absolutely. What do you plug into your model? Is the number 25% on autos? Is it 10? Is it something else? Like for North America, is the number lower? Is it 0? No one really has any idea what any of this looks like. So, we're all hazarding our best guesses and trying to help investors navigate this. But it's very hard, I think, to write anything with pen into the model for a company and try and figure out what that means for pricing.